Hi everybody, Tom Williams here, speaking to you from Worthing, Sussex, and it's not too hot today, thank goodness, so we're all fairly happy here. I've got Rita here, Peter here, so as I say, this is the team for the day. Now, Dallas is here. Muggins. Giving all cups of tea and coffee. Thank you very much. Okay, now, you've all heard of these setups that Gavin's created. Now, I had, apart from designing the rule sets originally and putting numbers on, I don't have really anything to do with that. But it seems to be on a winner, and of course I don't have access to a programmer, so I can always make things better. But now the reason why this is a 15-minute chart on the screen of the Dow Jones, right, Industrial. Now Peter pointed out, and you're quite right, there is a setup. This is a setup that Gavin is talking about, and whether this would automatically send out an email to you, I'm not quite sure. Any ideas on that, Peter? All right, but look, here's the setup. Now, it's very easy to, if you understand the underlying principle, it's very actually easy to see. Now, first of all, the market has to fall, right? It has to fall. It doesn't have to specifically fall any certain amount. It just has to fall, okay, which is understandable. Then at some point, as it declines, the price will start to look favorable to professional money who thinks, right, I think we can move in here, buy some of this, and then we can make some money on a rally, right? That's what they do. And sure enough, look here, market falls, but this is only part of the setup, right? And there it is, down bar. Remember, professionals have to buy on down bars because of the size of their orders. Okay, so it plummets down here, marked down with enthusiasm probably by them, right? We see very high volume come in, or activity. Now that activity must mean something, mustn't it? It's not just there to make the chart look pretty, right? And the fact is that you're down into fresh low ground. The fact is it closes in the middle, look. You have to assume that they're buying. Now it's produced a signal. Yeah. Now that is we've called that on this chart a selling climax, and that describes it. Right. What happens in these falls? Right. Weak holders are very unhappy. Right, as they see these prices fall, then pushed on by some bad news of some sort, right? It's marked down, and usually that's enough to say, oh, I can't stand this anymore, I'm out of here. And the professional money step in and absorb their selling, and that's what gives the high volume, high activity, and that's close in the middle, produces the signal. And even next bar looks up, responding to that, and there's a signal on that. Right, and that's probably right, shakeout, look. Okay. Now, that's the start of the sequence. It's not the time that you rush off and buy. You are aware that they will probably have to test that volume there. because whenever you see high volume like this, it means that there is supply in the market. And before the professional money can dive in this chart properly and mark it up, which costs them money, right, they have to know that there's no supply lurking in the background. Okay, so I go up, bar, up. Notice it's coming up to no demand. Look, then we get red down bar, and then bang. It's marked down. Look. Now the significance here is that, of course, the low is in the same level as here. Right, that's the key to the setup. Right, it's in the same area, and when you look at the volume, there's none there, look, or very, very little relative to this. That means that the selling or supply that was present at this level, 1, 2, 3, 4, 5 or 6 bars previously, right, has disappeared. And that means that that gives the okay for professional money or to mark it up, right? And that's exactly what's happened. Look, that is a setup. Now, hopefully, these you should, if everything works properly, you should get an automatic email that arrives telling you, not quite right. I'll let Peter tell you in a minute. But you should get an email telling you, look, pay attention. There's a potential setup, because that's not the difficult part of BSA. It's all very well reading the bars and charts and saying, oh, it's going to go up or down. That's fine. But it's finding these setups when you've got literally hundreds of charts. Can you say something, Peter, about it?
Yeah, thanks, Tom. Yeah, so what Tom was talking about there, he's right in a sense, but just to qualify what he was saying is that there's a new service called, I think it's called Trading in the Markets or something very similar. Is that right, Rita? Yeah, tradingthemarkets.com. And it's a service whereby somebody from, loosely speaking, TradeGuider will see a trading setup, do a short video about it, and send that out with an email. So Tom's right in that respect, but it takes someone to actually do that. And the other thing about that is that in order to be timely, it probably wouldn't be on a 15-minute chart, because clearly if I saw that setup myself, I'd have to be pretty quick to do a quick video, and you'd have to see it quick. And if you were interested in trading it, that's obviously your decision. The market could well have moved, and the move may be not quite as good as it was going to be. So I think the video, or rather the email alerts that come with the video explaining what's going on, for you to choose what to do, they may well be on larger time frames. And it's only for people, as Rita says, who signed up for that trading. What's it called again, Rita? Tradingthemarkets.com. Which, if you type that in, tradingthemarkets.com, you'll see what it's all about. So that's just to clarify that. Okay, Tom, back to you.
Thank you for explaining that, Peter. But when you see these setups, like that one right there, right in front of you, down the bottom there, that is a setup. And if you see a setup like that, you have a supply, the high volume coming in, and that can only be caused by professional money stepping into the market. I mean, what else can cause that high volume? Tell me. It can only be professional money stepping into the market. It can't be selling. If it was all selling, then the price would have plummeted. But it went up after that. So there must be buying there. You're down into fresh low ground. The market's vulnerable because it's fallen. So it can't be anything else. All we tell you is logic. We don't hoard any secrets or anything clever or anything like that. It's really a game of observation and understanding the principles of how these things work. And that's a really classical, and you see it all the time, all sorts of places. Daily charts, even weekly, you see all sorts of places. Right, okay, so, and then, right, it bounces up. But, of course, professional money wants to know if all that supply is gone, and that's why you get up here, no demand, look. And it comes off back down into that level, that area. It's gone back down into the basement to check it. Right? That's the thing. They've gone back down into the basement, had a really good look, and there is no supply left. Now, we know they're crafty, right? They knew that that was bullish. Look, note how the spread is narrow. And the reason why we know they know is because, look, this is a wide spread up. This is done deliberately because they know how the human mind thinks. Very often, you see, if you had failed to do anything there, and suddenly this bar here up here, you think, oh, I seem to have missed that. Oh, I missed that. But that's what they want. They want you to miss it. Right? And so that's really confirmation. Now, it's going up here now. It's a little bit of no demand by the look of it. Well, it is, look. It's going up on no demand. However, I don't expect this market to fall off. Why? Because here, this you got this right behind you, look. This is right here behind you. So I don't expect the market to fall off. Now, please, now's your time. Questions? Right, Rita says we have 2 questions.
Hello, yes, first question from TP King. Is it correct that once you see the setup and then jumps the creek like it has, is it then even stronger in the bullish direction? Is it correct that once you see the setup and then it jumps the creek like it has, it is then even stronger in the bullish direction?
That business of jumping the creek. I don't use that terminology. It comes from the SMI course of Phoenix, Arizona. And although it's quite a good course, they're a long, long way behind this computerized version here. Jumping the creek.
He's saying that jump the creek, that's here, this level here.
No. Well, you may be right. Yeah, where's the creek?
Oh, here. This level. Yeah.
You know, it's all very well, but, you know, it's jumping the creek business. It's fairly obvious that the market suddenly became bullish at the bottom. So why are we waiting for people to jump creeks? Get wet. You know, it's there at the bottom. And that's why I say we can't help it. Wyckoff never had computers, so he can't look at things like we can. So
he's saying if it goes past this level, is it even more bullish?
Well, what would make it more bullish would be a test. In other words, you see a down bar, narrow spread, red is a red bar, down spread, close in the middle, volume is clearly low. Then that tells you it's very strong. But see, all this business, like you say, of jumping the creek up there, all it's doing is complicating your life. All it's doing is adding a workload to you that you don't need. You could see the signal at the bottom, look. You could see the principle clearly, so why worry about creeks and all that stuff? Anything else, Rita?
The previous 4 bars are having decreasing volume. Could this be looked at as weakness?
No, I just mentioned that before. I mentioned it's going up on low volume. That's all right. But it's not weakness, is it? You've got that strength in the background. That's serious stopping volume at the bottom there. And no supply. So that's bullish. Now, how far that'll move that market up, of course, I'm not sure. But you would expect a certain amount of no demand where you are, but don't worry about that. The main thing is you should have gone long at the bottom there on that setup, and then you're following the move up with stops on odd number, well away from the live market.
From Gordon, after the big down bar, here Tom, as you know, why does it typically go up and then down for another test of volume?
Sorry, Breeza, say that again. Well, wait, hang on. It goes up because on that down bar, as I explained, there's obvious buying from the professional money. It can't be anything else. As I've said, what else, if you could tell me what else that possibly could be, I'd be interested to hear. It's down bar after the market's fallen, down into fresh low ground. The activity or volume is high. On that high volume, it's closed in the middle. Now, if that high volume represented selling or weakness, why should it close in the middle? It wouldn't. Don't forget, these traders are at war with each other as well. They're not all pally sitting there slapping each other on the back and everything, right? There are no friends in the stock market. So they will grab anything, profit from anybody, if they're weak enough to allow it. So it can't possibly be anything else but selling. And that's why it went up. And then the significant thing is, I've mentioned this no end of times in these seminars, that the biggest danger to professional money, if you're, say you're a professional and you've thrown in 60,000 contracts, right? The biggest danger to you and your trade is that somebody even bigger than you is going to short or sell 60,000 contracts suddenly or more. And this can put your move in jeopardy. And therefore they have to know that there's nobody out there likely to do that. Professional money won't do it, because if they do that against the trend of the market, right, it's going to cost them a lot of money. And that's a quick way to go bankrupt. So they know that, and therefore they have to bring the market back down to that level, right, to make sure that the supply that was apparent over on the left, look, has gone. The enemy has been driven out. And I explained it as Second World War, a general sitting in his command tent a few miles from a town that they want to capture. Now, it was full of the enemy yesterday, so they bombarded the hell out of it and bombed it, right? Now, the general, rather just send his troops in over open ground to attack the town, right? They might get mown down by machine gun fire. They want to know whether that danger has disappeared. So they send in an SAS column, or green berries, or whatever you call them, at night. Could only be a few, to test the supply.
Okay. Thomas is saying the large down move was after the unemployment announcements. Is the bounce and retracement typical of such news announcements?
Yeah, so Thomas is it's Peter here. Thomas was talking about earlier today that the market was going more or less sideways. There was some news at 1:30 UK time in the afternoon, and the market shot down, then back up, then down again, I think, on the lower time frame. And so the rest of the question was, let me just see it. Yeah, so is the bounce and retracement typical of such announcements? I suppose in a way asking what impact does the news have?
It has no genuine effect on the market news. What was it, unemployment? Yes. Now just think a minute. You've got this stock market, right? There's 500 of the leading stocks virtually in the world there running that index. Now, I described it once as you're standing on a bridge over a main line, railway line, right? You've got an engineer on board and you're in communication with it. And I said, oh, it roars up under the bridge at 150 miles an hour, whatever they do these days. And I speak to him, and he says, oh, yeah, no, everything's fine. The light bulb's gone in the toilet in the second carriage. Now, that's about the effect that news will have on the S&P 500. It just is, it's a joke. It's a laugh when you think about it. You know, it's really a joke. So, the professional money wait for some announcement, knowing that they're pushed up by news and one thing or another, that it will have an effect on the market. But if that affects you, you shouldn't be in the market. You're too naive to think that. So I'd say no, it's not.
It's kind of used, isn't it? Yes, just to differentiate what Tom's saying is that, yeah, nothing actually changed really. The unemployment figures were X, Y, Z, but nothing's actually changed. It's all been going on the previous week or month. So, Tom, are you saying that actually the news is often used, if you like, as a, how should we say, as a lever to move the market around? Yeah, so Tom's saying definitely. So the news can be used as a lever, an excuse to move the market around. Obviously, if the market went sideways all day long and all night in a straight line, no one would make any money. So the market has to go up and down for people to make money. Rita?
Okay, from TP here, Tom. Listen, he was talking about jumping the creek. So he's not worrying about creeks, but he's just what he's trying to say. He's looking for a target once you took the setup, and so once it jumps that area, the creek, then there is more room to go versus getting stuck at that top where the creek is. So since it jumped it, or broke out of the previous swing high into no demand, then you have further to go in order to stay with the trade. Is that so, Tom?
Wow, that's right. Research said I follow a trading system. You see, this target business, I don't understand when people say, oh, what's your target? Well, my target is, if I go long, my target is a sign of weakness appears. That's what I'm looking for. And when I see that, then I'll probably close the trade out. Weakness when it comes in is pretty obvious. But the trending system is pretty good. And the reason that works is that professional traders support the market and they make sure that the close is higher than the close of the previous bar. This keeps a trend going. And that portrays it on there, look. You look back on these charts and you see that most of the time, right, blue bars indicate that the market's being supported. In other words, professional money is in charge of that move. And you'll soon see when they're not, it starts chopping around up and down and blue bars, red bars. But once you see these persistent blue bars like this, then you know professional money is in charge of that move, right? You allow for one down bar, and that down bar is usually on low volume, right? And usually, if you see these up moves like this, and if you ever see this red arrow like this here, look, there, right? And in the next bar it's tested, which it isn't here, because it's bullish. But sometimes they're not quite sure, you suddenly see a test. The next bar will be a red down bar, narrow spread, close in the middle, volume will be low. Then that's the time to jump in and buy as well for another extra position.
Jacopo has asked for us to analyse gold. Down, there. Oh. That's the
Up to, I don't think this chart's up to date. Right, up to date to yesterday. Gold.
Right, gold's one of Gavin's favourites to follow. I mean, I don't trade gold, but by looking at this now, to be quite honest, it looks a bit weak to me. Why do I say that? Well, okay, it's pushed up through there, so you're overbought. Okay. There is some high volume in the background, which indicates there might be supply present. Right. Now, the bars, as they go along, there is such a thing as strong or weak bars. Now, every time we get a blue bar, look, it is on slightly no demand. Now, there is definitely an increase in volume here, look, and that's on the down bar with a top tail. Anything sticking up like that, we call the top tail. There's nothing you could say definite here, but it gives me the impression of being weak. It gives me the impression of wanting to drift off.
Hello, Eleni. Eleni's asked for lumber. So here's lumber, Tom. Do you want to put the longest time frame up first? Okay. that's the longer pitch now. And that's this volume came on there. Do you want more bars for? Or
What's the question now?
could you analyse this? It's lumber.
Oh, lumber.
Lumber for Eleni.
Lumber. Right. And this is daily chart, is it?
Yes.
Well, for strength, I don't like with high volume, like this, followed by 2 down bars, although the spread is narrow there.
Eleni's just closed her shorts, she said.
Oh, that's probably good. Yes, that's probably good.
Tom, ask her why she closed it.
Why have you closed it, Eleni?
To wait for Eleni to type.
That's all right. Well, this week is right at the top, look.
She says volume a bit too high.
Yeah, you're right. You're right. That's very good observation. That's why I was saying it doesn't look bullish to me. But when the right time comes, it'll make it fairly obvious. As long as you can see and recognize a principle. I can always do a newsletter, a chart on any particular subject you want in the newsletter.
So it's Peter again. On this chart, Tom, Eleni was, if I'm correct, was short and is now closed out. And if I'd seen that, I'd have looked at that narrow spread and been concerned with my short. So, Tom, Eleni was short, presumably up here somewhere, and she closed out down here somewhere because of the volume. So I'm assuming from that she meant that because of the volume coming in down here, may have been a sign of that it wasn't going to carry on going down necessarily. So she was uncertain. I don't know if that is how you see things, Eleni. But just to be clear, so the volume coming in on down bars can be supplied, but it also, at some point later, may show up as being some kind of strength, but not on the face of it, except for the narrow spread. What do you say, Tom?
No, don't forget it's called volume spread analysis. So not only we look at the volume or activity, we look at the price spread. Now that very last bar, assuming it's the correct and not some holiday or some other reason or limit down or something going on, you have to be fully aware of what's happening there. But narrow spread like that is basically a little bit of strength that's come into the market. But there's nothing there. Well, I wouldn't go long on this. No, I want a lot more evidence to go long. But I'm glad that you can short and close it out.
Yeah, just telling you, Tom, Eleni says she shorted from 3.38, so sort of up here, up near the top. So great. George would like the pound up. The pound. It says you had a chart of the pound up. Was that the daily? Can you remember, Pete? Was it the daily we had? To just now. Gavin previously had a trade alert for possible short on the pound. is it still looking weak to you? So this is a daily. If you want some other time frame. Yeah.
Well, the top part of the chart you see here, I mean, I personally wouldn't have shorted. There was not really enough evidence for my liking, but it has gone up. You are vulnerable. The market has rounded over like a mushroom. That's usually a sign of weakness, because every time it went up, supply would come in and tend to cap the top end of the rally, and that in time creates like a mushroom top. But I can't see anything very, very obvious, like end of a rising market signal or anything like that. Look, I personally...
Gavin was looking at intraday when he sent out the...
Intraday might be different. This is daily chart. Yeah. So I can't give a definite opinion on that because it's not clear in my mind.
So we don't have interest. You sure?
Yeah. Oh.
Well, hang on, we do. I thought we did. I'm going crazy.
Got the future for it.
Yeah, we've got the future.
What's it? A, B, C, and D.
B. Sorry, there we've got the future. We do have intraday. I wonder what they were talking about. Yeah. So that's the 15 minute. Do you want to talk about that?
Is this Japan?
Yeah. Yes. B. British pound.
Now this is more likely worth an alert. You've definitely got a sign of weakness here. The market's rallied, look. There's the top reversal. Automatic signals. I'd say, yeah, so that's it. Oh, that would bring out the alert. The signal supply, right, followed by no demand. That would definitely bring an alert up. So that was weakness, and I would have thought that weakness is still there.
A request for the yen, 15 minutes, Peter. Oh, keep going down. There. That's the one. They're very similar. Put more bars up first. And it's true. Yeah, so that's... Could you talk about that, Tom?
There must be some news or something here.
Yeah, all right, so that must have been news, we're saying. Does anybody know what that news was? Yeah, same news. The unemployment, maybe. Okay.
Well, you could imagine non-payroll payrolls active in Japan. Do they have farms in Japan? I've got no idea. I mean, sushi farms. You know, I mean, relying on news, but they will use the news. But here we got signs of weakness. up here. And I always say to Gavin, ignore the signals at your peril. Supply, right? Follow. Oh, that's still supply. Oh, I see, yes. That's interesting. So that's supply. And is there no demand on the next bar? But there'd be no demand on this blue bar, I'm sure. So, although there's no signal on that, and that's why it's come off. But there's not a lot of selling pressure on this. I wouldn't rush in and short this because when you see these markets have this saucer shape, that's also opposite to a mushroom shape, and that shows you that there must be some support in that chart, because every time it's marked down, even if it's only one bar, the support will tend to, over a period of time, give a saucer shape to it. So I'd be very careful there. I certainly wouldn't jump in and short that.
Could you put TWC up? I'm not sure what. I've certainly seen it in my travels through the TWC. Yeah, Time Warner. So Peter says he traded a stock today called TWC off a very short-term chart. We don't have data in short term. We only have the daily. He says, was I lucky or was there a genuine signal there? Well, did you go short or long, Peter? Was a question. But we don't have, I'm afraid we don't have the short-term charts, but just waiting for long at 10:31 US time at 1:11:32. Yeah, it's just we're going to look at what are you doing? We're going to look at the E-mini. That's US time, so we can't say.
This is the 15-minute future of the S&P.
Tom's going to comment on this.
On the base here, there was a little bit of buying. That's why it went up, look. Right, there's a sign of strength here. Stopping for it further. And then they've tested it, look, down there's supply present here. Right, so it's not going to go up right there because supply is present. So it went up, came back down, had another go at that level. Right, this is a different kind of setup, look. But the underlying principle is the same, look, and supply has now disappeared. That's why it went up. So it's going up here on no demand, and they're going to have a job because this isn't all that clear on the base here, going up through here. Going up through that high there is going to be difficult for them. Unless the general index shoots up, I doubt very much if this stock will go up through this high here. For simple reason is that there was supply present here. There, look. and of course back here. So if you caught that up move, you probably were a little bit lucky to catch the up move. But it doesn't look to me as if it wants to go a great deal higher. What was that, Peter?
Saying this is the index. We don't have the data for the chart.
We don't have the data for a chart, for that chart. What index is this?
S&P.
Oh, the S&P.
It's, if you compare this, funny enough, if you compare this chart, which is doing the same sort of thing, with the Dow today, the Dow looks much clearer.
Yes, it is.
Sometimes that way.
Yes.
Craig has a question, general question, Tom. Based on your experience, do you give any particular significance to gaps up or down?
Well, this gapping up or gapping down is certainly significant. One of the most strongest signals we saw last week, is what we call bag holding. And that is usually, and that particular example wasn't gap down, but usually they are. They gap down and you get a narrow spread, massive volume, probably close in the middle, and after the market has fallen and inevitably on some bad news of some sort, or alleged bad news, right? And that's bag holding, and that's practically always, it wasn't last week, usually it's gapped down. And of course, the end of a rising market is usually gapped up to attract people. Oh, look, it's going up, let's get in, right? But when you see these massive gap downs on these charts, that's usually built-in weakness, and it's best to leave those alone. We're talking about a single bar gapping down or gapping up.
This is Apple, Tom. So there's the sort of. Oh, isn't it? All right. So hang on. So Farah has asked us to look at a few stocks. We'll look at one or two and carry on with the other one because other people have questions as well. But first of all, we're just updating this chart. Okay, so this is Apple, Tom. Could you comment on Apple at the moment?
Is this a daily chart?
Yes.
Looks fairly strong, you see, because you've got obviously some buying here. Overall, Apple, it was looking weak originally, I know. But if you look down here, right, there's some definite buying here, look. We've even got signals appearing. And in fact, it has gapped up there, look. Right, well, that's fine. So it goes on up, look. But then here, they've got definitely a test. This is a significant test. Looks like a shakeout. Now that would make that market strong here. That's a shakeout, a test, be on some sort of news. And it's gapped up, and even that gap up is tested, look. So this stock, although there is some supply on that bar there, they may possibly want to test that. So you keep that volume in mind in the future. But at the moment that looks reasonably strong, but not strong enough. No definite principle there that I could see that I would say, right, I'm going for that.
I don't know where OPT, I've never even seen it. Anyway. Right, for Julius, a daily chart on the US stock OPTR had bag holding 2 days ago. How long before the market usually responds? There.
Well, it usually responds almost straight away. May not start moving up into a bullish move. But that is definitely bag holding, look. It's funny enough, look, it's gapped down. So I'd say some of them are gapped down. Very interesting. All right. Now, it's got to be professional money buying. If you think about it, it can't possibly be anything else, can it? If it's gapped down into fresh low ground, right, the spread is narrow, it's closed in the middle, the volume is massive, it has to be bag holding, it has to be professional buying. Now they may want to calm the camp down, shall we say, because other professionals would notice that straight away. That you'd expect that market to start going up on that signal. Okay. What was that previous?
It was OPTR. I don't know what it's...
Interesting.
Yeah. Why is this not going on? It's me. Oh. Why is it not? Right. Not like that. Why?
It's front data trade.
It's all right, Tom. It's me. I'm just having a funny moment. Right. Thank you. Just insult all blondes. Apparently I'm having a blonde moment. Right. Amazon. This is Amazon, Tom. Could you comment on... So that's up. I can put less bars up if you... hang on. Hang on. Yeah.
Right, thank you, Rita. Amazon, right. Well, first of all, it appears to be acting not strong with the index, but certainly in that area as strong. Right. Now, what would particularly worry me a little bit was this high volume here. That is high volume, look. And on that high volume, look, it's knocked the market down. So there is a bit of supply there. So that would put me off having any interest in this particular stock. But it's certainly worth putting on your watch list. But markets don't like that very high volume and up bars because it means telling you, look, there's supply present. And that's what professional money, they don't like supply, because that means that there's supply in the market. Is professional money unloading their holdings bought at lower levels. That is usually, well, it is not bullish. That's usually a sign of weakness. So you have to proceed with great caution here.
Okay, well, we're running out of time, so this will be our last one. All right, where's Baidu? Is it on a different one? All right. B-I-D-U. B-I-D-U. Baidu. Last one. Oh, and there's a few more comments. We'll just deal with this one. Baidu. This is Tom. Baidu.
Well, this stock looks strong, doesn't it? I mean, admittedly, it's gapped up here. Right. There is high volumes. It went up, look, which is obviously a bit of supply, which is only normal. However, the result of that high volume has gone up, look. There are a lot of red arrows appearing, probably no demand. Yeah, so loads of no demand you do. And that's usually a sign of weakness. Now, what you would expect with a stock like this, you'd expect with all that weakness there, is that at least they want to test this volume here, right, and that gap up. Because the gap up usually is done deliberately to overcome supply that they think could be present. But before they go any further, they need to drift off back down and test that level. So that's what you would expect with a chart looking like this. Okay?
Just finally, we're going back to this Optima or OPTR chart for Peter. He says, if you look left on the chart, you will see that it is into an area of former support. So here, this area. So is that significant to you, Tom? And shall I put less bars again?
Yeah, please.
So it's in an area of former support, this bar here.
Well, if you come back down in the area of former area of support, if these, as you see there, down bars, narrow spreads with high volume like that, they're buying, they're supporting that market. So there's strength in that particular stock. Because not only is it a former level area where there was support in the past, there is now obvious support, down bar, narrow spread. There's even a signal there. Bag holding. So there you are. There's another example of bag holding. That's serious buying from professional money.
Okay, thanks, Tom. Okay, folks, that's it for this week. So we'll see you next week. And Tom, are we doing a newsletter this week? Oh, yeah. Saturday. So we should post that Saturday, tomorrow evening, or tomorrow afternoon. US time. This webinar has been recorded, so you can watch it again when I put it up. And anything else? No? Have a good week, have a good weekend rather, and we'll see you all next time. Oh, yeah, Tom just said something. As part of tradingthemarket.com, every week Tom does a short video looking at stocks that are acting as strong as or stronger than the index, the parent index. So that goes out every Thursday. We did one yesterday for about, I think it was 7 minutes, and 4 stocks. So why it's worth looking at those stocks is because obviously if they're acting as strong as the index or stronger, when you see the index moving, you know that they're likely or more likely to react favourably to the long side. Is that right, Tom? He's nodding. So just a heads up there for trading the market. So we'll see you again next week, same time.